Okay, hello everyone, welcome back. So, let's finish this thing real fast. Alright, so this was a chart that we have seen earlier. Right? So, this was the chart that we have seen on the previous video, right? If you remember it, and we had this black box sequence here. There already, was there a buy up here? No, didn't break the 0.5% no buy here. Okay, but we will use this candles, this black box ep18 as a target. Okay, so next what we have? Bar. Third one broke. What is that? A sell. That is a sell. Okay, that is a sell. Then our stop loss up there almost immediately. The market returned, right? Retraced back up and hit our stop loss. Not right there, but upside. It hit our stop loss. So, let me zoom in on this. So as you can see, this was it. This was the sell down there. Then a little bit push downside and then reversing to the upside. Okay. And then stop loss up there. Then this formed these two candles, right here, 1, 2. Then the sell down broke, another sell. Okay, so we are already in a sell on this one. Stop loss up there, and we have another sell down there. Stop loss up there. Two sells, right? Then the market immediately pushed back up to this one steep it rising. So you can see market broke, came back, look at that as a retest, pushed up, right? Then this candles halfway, bang, traded down at the cheap price and the discount, and then look, the pump. The target all along was up there, so you can see it. After that, look what happened, the price dumped, right? It dumped. Then what happened? Up there, what happened? Stop loss with two of them with the stop loss. Then what I'm gonna do is I'm gonna enter a buy stop loss down there, not down there, it's down there. Okay, we have this black box here. Okay, then up there is a buy. Targeting these candlestick to this ones, and it is on this ones, it is only take it to this one up there. Okay. Then the market pushed, and then came back to this black box right there. A little touch, and then look at that. That's a huge bounce upside. Okay. It was not it for this one, so that's why they pumped it one more time. So that is all the business here. So two losses here. This one and this one, the sales, and one win to the upside, right? Then afterwards, what happened? This black. We broke. That is a buy. So that was a buy. And then almost immediately, After taking partials at TP2, almost immediately dumped. Okay, it dumped. What does that mean? I'm not gonna sell it. I'm not gonna sell it. Why? Because that's a stop loss in my entry. This is a risk. The previous one was my entry, my stop loss. This was a risk. So it is half the risk, the previous one. But this one is huge. It is double. It is double. So the best thing is to wait for the retest. If TP2 is not hit, the reason that I didn't enter down there is 2.5% was not broken. Okay, 2.5% was not broken, so no enter up there. But up there something changed. 2.5% everything was broken, so that's a buy. That's a buy. That when you measure from the bodies, what you're gonna get is TP1, TP2, okay, something like this. TP1, TP2. Most likely TP2 is hit. So, which means no entry. No entry is the downside. Unless another black box forms, there is no entry. Okay, pass, we are passing it. Then another form, 1, 2, 3. Then nothing happened. Then the fourth candle broke. When you see the shape, only the two candles in the third one are similar. Okay, they are similar. What does that mean? It means that I'm gonna focus on this, not this big candle. It is gone. Okay, but we can use that one for TP, projection. Okay, TP projection, and then look what happened. That's a sell down there actually. The market pumped. It pumped. I already told you to take partials at TP3 of the breaking candle or the candle that follows the breaking candle. Okay, unless 2.5% is broken, we can use that as a TP. So when we project it to the downside from this to there, the downside. So TP3 is up, right? TP3 is up there. When we project it to the downside, it is TP2. TP2 is down there. That's TP2. That's TP2. So it looks like we're not gonna take partial sell because we wanna wait for TP3 for the breaking candle. For the breaking candle, which means I am measuring from down there to up there. This candle, this breaking candle is not gonna be included. Okay, only the two candles are the ones I am interested in, the ones that I am measuring from high to low. Okay, so which means TP3 is most likely triggered. It is triggered down there. Okay, when you measure it from Z2 down there, TP1, TP2, then TP3. Okay, so that's take partials right there. Take partials. But since before that, look at that, my stop loss, my entry. Is this worth it? No, it is not worth it. It is not worth it. So what does that mean? Pass. I am passing this. This is a pass. This is risky. This is risky, as you can see. As a risk, I'm not going to enter that trade at all, okay? It is risky, too much for stop loss. So I'm not going to happen. I'm going to wait for other block boxes. Then we have, as you can see, we found one. Okay. Then broke, right? But we didn't break the low. Okay. It stopped up there, so no more information. So we'll wait for more candles to form. Okay. That's the whole business here. So we had a loss here. I mean, yes, sir. A loss, then another sell down there. That's a loss. Then a buy. That's a win. Then two losses and one win. So and that okay, we just found it. We found this one. That's a buy. Relative profit. So if we measure from the low to the high of the bodies, you're gonna find out that P1 is up there and the P2 is triggered. That's why the market changing direction. Okay, P2 is triggered. So if my entry is close to P2 and if there is no other big black box that I consider as a target, which is inefficient, which didn't hit TP2, if I find some black box before this, and I'm gonna consider buying, even if my entry is in the same area as my TP2, right? TP2 entry, even if they are in the same area, I'm gonna consider buying or selling. I will enter that trade. Why? Because I have a target that's unhit, that's undelivered, that's inefficient. So I'm expecting that one, and I'm expecting for that push to this previous candles at TP2 rise. Okay. So that is no entry, by the way. There is no entry. That should be my entry, and my TP2 is up there too. So it is not a good idea to do that. Okay, let's go to the next one. This is euro dollar that we are seeing in the past months or so. So as you can see, find the black box here. Do you see anything? Yes, where? There, 1, 2, 3. What happened? A buy. Stop loss down there. No. It is actually a buy, but I'm not gonna enter that. Why? It is risky. It's very risky. It is very risky. It's huge risk right here, as you can see. I'm not gonna enter that one. What do? I only enter a retest this. If TP2 is not hit, retest this. So we measure from the body to the body. TP1, TP2 is null. TP2 is hit, which means this black box is done. It is done. I'm gonna run for the next one. Then what happened? We found another 1, 2, 3, then 4. Right. Then I'm gonna narrow it down. Now I will narrow it down. How? I won't consider this. I will consider this one. I will consider this one. Okay, and this one. Now what happened? Nothing. Didn't break the high, didn't break the low. We are still in the black. Then what happened? That is another black box formed. Yeah, there we go. 3 candles. But stop loss down there and my entry up there because the risk That is not gonna happen. That's not gonna happen. Now, my TP is gonna be from the body of the third candle and the body of the two previous candles. So TP1 and TP2 and TP3 most probably is exactly right here. Okay. So the only way that I'm gonna trade this is if market comes back down there. It did come down. Where? It did come down. Look at that. It did. This is a black box. I already told you that most of the price reverses on these two black boxes and then two candles. Not down there. Stop loss does not come below or above the two candles. This is a golden zone. It does not always come to the golden zone. Silver zone. So silver zone is most likely hit. As you can see, triggered. It hits that one. If I interrupt there, the stop loss down there is a little less risky trade. Less risky trade, right? But as you can see, it is still a huge distance. But as you can see, it's a little less risky, which means I'm going to enter for the potential profit. My profit is going to be upset. It is going to be most likely upset TP2. So for potential 1 to 2, I'm going to consider entering this one. Okay, I'm going to consider entering this one. So as I buy, the only buy will get upset. And then price pushed back up and formed another black box. 2, 3. This 3. We broke up there. I'm not gonna enter my stop loss up there and enter up there. No, thank you. No, but I'm gonna use the TPs. TPs, look at that. TP2. And then what is the price do? Down. The rating TP2, it melted. So pushed the price, pushed until this black box is TP2 is hit, which is up there. Most likely it is up there. Okay, and then form another black box. 1, 2, 3. Stop loss down there. Enter up there. Still a risk. Still a risk. Stop loss down there. Enter up there. As a risk, my reward should be up there. Right, more than up there. So 1 to 2. But as you can see, still a risky. So I'm gonna consider entering this if TP2 is not hit. If TP2 is not hit, which is up there. This is a black box. 1. TP2 up there. Okay. These are not that bad. So it hit TP2 for everything, for every black box. For this one, for this one, for this one, it delivered. It is efficient now. Then we form this one. 1, 2, 3. This 3 candles. Then we broke. Actually broke up there, but our entry is up down there. So stop loss up there, right? Risk too much, no entry. Only use this for what? For price direction indicator as directional indicator down there. TP1, TP2 is down there. Which means if I get a smaller black box up here, I'm gonna enter S. Why? My TP2 is down there. So I'm gonna target that one. Maximizing my profits, not this one's TP2 only. Okay, so marking out this bigger black box TP2 is even good. It is rewarding. Okay, you will know where next the price will gravitate. Okay, where the price will be pumped or down next. Okay, that's it. And let's jump to it's the same thing. As you can see, it's the same thing. So nothing different. This one we didn't enter a trade due to high stop loss, so it triggered X. This one we didn't enter this one due to this week. If this week was not here, I'm gonna enter upside. This would have been great, but the week was there, so now entering and TP2 nailed up there. X. This one 2, 3. The same thing. Stop loss down there. Entry upside. No, we didn't. We cannot enter that. TP2 triggered upside. X. And then this one might have been a good trade, but look at this week. This week was not good. This week was not good. Okay. So anyway, so this was a black box and TP2 upside triggered X again. So this one we don't know yet. We have no information. It's still pumping TP1, TP2 down there, still pumping, we don't know. Okay, I'm gonna pass. So let's come back here. As you can see here, we have a lot of black boxes, as you can see. But right there, something unique happened. 1, 2, 3, right? We broke. That's what I said. Stop loss is not too much. It is still huge, but considering the reward, it's not too much. So that's a set. Targeting what? Targeting TP2. Targeting TP2. That's a set down there. Up there, stop loss. Okay. You know what happened? Then price down. Based on this, I'm gonna take back my partials. TP2 and TP3 right there, I'm gonna take my partials. 30% off. Let's underline. Now my entry, my stop loss is at my entry. Where? Right there. Okay. And the price pumped more. So back to TP4. So now I take my partials at TP4 too. TP4 you can take my partials. And after this candle has finished trading, you can measure this just like I did it. Just like I did it now. TP2 is down there. TP3 is up down there, right? So I'm gonna consider this as a potential target. This as a target. Okay. Where the price might gravitate to. So my entry up there was great. But price came down there and fell short of without hitting it. Change direction. Then what happened? Nothing happened. There's no black box, there is nothing here. My stop loss triggered because I trailed to close right. Then nothing happened up until here. Only there we got one. What is that? It bought stop loss down there, not good. That's not a good risk to reward, not gonna happen. So as you can see, TP2 was it comes. That is TP3 for this black box, right? Which means this is X, this is depth. Now I'm gonna run to the next one. The next one, where is it? It's the same thing that I showed you earlier. It is the same thing that I showed you earlier. This one means this run right here that you are seeing is this one, except zoomed in. So this one is the same as this one. Okay, I told you after this. That's the same. I told you that that's the same, right? In the earlier, right? So stop loss up there. I told you this is going to be huge, so I'm not going to consider selling this because it is huge. What does that mean? I'm going to use this for TP projection. TP1, TP2 is most likely rising, and TP3 rising. Right? I'm going to use smaller black boxes. Smaller black box, which can be formed when the price comes back up because there might be a retest, most likely. So I'm going to use that to target this bigger previous black boxes TP2. So that's the sell up there. Target TP2 down there, right? But that didn't happen. Of course, we had the black box here, right? But that didn't happen. So at least I'm not good. I'm not getting down there, not gonna. But since I assumed it is a huge stop loss because I zoomed in a lot. So as you can see, this was a zoomed in. So this one said, remember this one, put it in your brain. This stop loss and this stop loss, they are not the same. This is small, right? This is a smaller than the previous one. Why? Because it is zoomed out. So if the market is zoomed in just like this one, it might seem bigger. It might seem from this up there to down there. My stop loss should be on there, up there, right? But no. When you zoom out, it is actually stop loss is down there to down there, not up there to down there. There is a huge difference between them, huge. So if it is like this, then I am entering a trade. It's not a lot of risk, as you can see. That's the sale. It is like this. The same goes for this one, right? Stop loss down there. It is not too much. It's not too much risk. I am willing to risk that much money. The thing that I have to do is to minimize my lot size. Okay. If you are entering a one lot, then you're gonna minimize it to 0.8, 0.76, 5, and still enter to not miss a move. Okay, that's a good idea. It's a good idea. It's better to make a little money than not at all. $0 and $10, there is a difference between them. There is a huge difference between them. So that is a down price, a huge down from up there to down there. That was a huge down. I don't know if it was in news or something. And then the next thing that we're gonna see is this one from up there to down there. It is gonna be crazy, people. It is gonna be crazy. This much Fibonacci extension. TP1 is gonna be down there. It's gonna be huge. TP2 is gonna be below the RSI. It is gonna be huge. What does that mean? It means if I enter this black box, if it is a sell, I could potentially move 50 pips, 100 pips. Okay, to the downside. So for this black box to form means that means I'm gonna make a lot of money. A lot of money, bro. It's gonna be crazy. So yeah, you should be happy when these kinds of things happen. Okay, this is beautiful. Yes. So this is the whole business here. So let's jump to the next one. What do we have here? Do you see any black box here? Yes. Well, here we go. But am I entering this one? No. Why? It is because it is risky, bro. Up there to down there, it is huge. It is even zoomed out, bro. I didn't zoom in like this. It is zoomed out. It is zoomed out, which means it is huge peak. So I'm not gonna risk that much. So the only thing that I'm gonna do is, if TP2 is not hit, just like this one, TP2 is there, as you can see. If TP2 is not hit, I'm gonna consider buying if price comes back down there. That's one buy, and the next buy rises. This is a black box. Okay. Another buy. Because entering up there and stop loss down there, it is not that much huge risk. It is not. Really, it's not. Okay. TP2 is up there. Look what the market did. It pumped. But never hit TP2. That is a good news. Right there, especially right there, bro. Your stop loss down there, your entry up there. Look how much you are looking at. This is a profit potential. I don't know if it's going to be 1 to 8 or something. It's going to be 1 to 8. It's nuts. So that's a huge potential. That's the second model right here. It's a black box. And this is the second model. Retest. Break. Retest. Boom. That's essentially. Then in the process, we formed another black box where 1, 2, 3, 4. We broke. Did we break? No. 4, 5, 6. Did we break? No. 7, 8. Did we break? No. 1, 2, 3. We broke. What is that? A sell. That is a sell. I don't care if the pitch is limited for this one. I don't care. We are down. I am selling. This is an internal black box. This is an external black box. I'm not gonna let the internal black box go past me just because I am waiting for the external black box to come to give me a setup. I'm not gonna happen. Stop. Okay. Then using this, something applies. Please don't mind what the person is down there, 30% off, and you do your entry now. What is that? Stop loss. The stop loss moved. It has to be moved down to the middle. I'm pushing down, and then we bring it to the beat. Okay. It's the same thing. The same thing that I told you before. This part is the same thing. As you can see, this part and then this part is the same thing. Now I need to repeat this one, so that's it. That's the whole business. So immediately the market on the bottom. Why? Because there was unfinished business That's it, bro. So it's just straight. And use just one hand. Okay. Use just one hand. It's finished the object. Now it is dead. This is dead. Not this one. Not this one. This one is not. It is still alive. But these are dead. Now I proceeded by second. Dead. Dead. It is dead. Let's go to our next. You will finish. You will finish. Brand. It's a mentorship of the video. Okay. So, do you see any black box?